No big surprises from the numbers because you did put out guidance towards the end of last year with your restructuring and a trading update. At this point, can you say that the bank has taken all of the pain that you need to take you forward?
I sincerely hope so, Stephen. It's very hard to be sure of these things, but we took a lot of pretty radical action at the end of last year, try to get it over and done with quickly, so that we could move forward and enter the new year focusing on our customers and trying to do good business. But it was absolutely clear, and I think we demonstrated in our presentation today, that revenue growth is not likely to suddenly come through. And so therefore, keeping this balance between costs and revenues is very important, and we've committed to try and keep costs flat in the current year.
Jacko, you say in the commentary today that you're well capitalized, profitable, and you have a clear growth path. What is that growth path, and how does it diverge from your previous path?
Yes, we spoke today, Stephen, about tightening the strategy. The strategy is right in our view, but it definitely needed some tightening. And I think what we're saying is that given the way the whole world of banking regulation has changed, the capital requirements that have been imposed on certain categories of business and so on, it has become much more difficult to do some of the things that we used to do profitably internationally and continue to do them profitably now. So we've had to say, look, what are the things that really are key for us? And obviously things like the sectors we concentrate in on the cross-border business, around commodities, around natural resources, mining, infrastructure, power projects and so on. Those are key for us, and particularly where they involve China and Brazil and countries of that sort, and if they're doing something that has an African link. So we've tightened it. Many of those transactions possibly we would have done in other countries in the past. Now we're saying Africa is at the core of what we do. So the growth path is still there, but it is more focused.
I mean, there has been speculation that you could be closing some of your operations outside of Africa as you strengthen your focus on Africa. Most recent speculation really about the Troika Dialog in Russia. Is that what you're looking to do? Are you looking to move out of some of those emerging markets, or would you still like to maintain a presence in those markets?
Well, what we said, Stephen, today is that we don't necessarily have to own a bank in a country. At the moment, we do very effective business between China and Africa without owning a bank in China. Currently we own a bank in Brazil. You could arguably do what we're currently doing in partnership with somebody else in Brazil as an example. I'm not saying that is what we plan to do. Troika has been speculated on, as you say, quite a lot. We will always want to have people on the ground in Russia looking for the type of business that is core to our franchise. Do we need to own a bank in Russia? No.
So, but you're not saying that you are selling your bank in Russia?
Well, we have an existing situation there. We are a minority shareholding, a very important strategic minority shareholder of 36%. If a transaction were to be driven by the chairman of Troika and his partners, who own 64% of the equity, we would have to decide what we do. We have certain, obviously, contractual come along and go along rights. We may be able to continue, even if Troika did some other transaction, we may be able to continue with the partnership going forward. So it's very much in the realm of speculation at this stage. There's nothing concrete, otherwise we would have said something.
Jacko, you mentioned changing banking regulations post the financial crisis, how you had to do some things differently. Some things were less profitable than previously. Non-interest revenue down to 29.9 billion rand from 31.2. 21% drop in trading revenue really behind that. How much of that's due to the rand strength over the period, and how much as a consequence of reduced activity from your clients?
Definitely the rand strength would have not had a huge impact on us. Ironically, or interestingly enough, more than half our trading revenue has got nothing at all to do with South Africa. It's to do with whatever, the Kenyan shilling or the Nigerian currencies or whatever, or interest rates or equities or commodities. So trading revenue spans a very broad range for us, and as I say, about half is South Africa. So the absolute levels of currencies, interest rates don't really worry us, but of course, when you have periods of relative stability, and you've had a lot of stability in the rand of late, you tend to find that your clients do not hedge, change their positions, and therefore there's less activity going through the markets, and that would tend to hurt us somewhat. And we did indicate that we, through some graphs, that we hadn't tried to compensate by taking more proprietary risk. We didn't take on more risk during the period.
An uncomfortable cost-to-income ratio, as you describe it, 61.7%. How would you see that normalizing or coming down this year with lots of those restructuring costs behind you?
Well, it's very hard to predict, and obviously if we've told the market that costs are flat and we indicated where the cost-income ratio is, you could work out what the profits are going to be, which we can't do in a forward-looking sense. But we would hope for a strong improvement in the cost-income ratio. I mean, we've had the bank operating at around about 50% cost-income ratio. Now we call it 60%, a massive jump, and it is because of a revenue issue. We haven't had the revenues coming through, so I would hope for a substantial improvement, but the extent of that improvement is literally going to be dependent on how much revenue growth we can get out of our operations. And as you know from South African experience, and that applies to a number of other countries in which we operate, the consumer's not really starting to borrow, and a lot of corporates are not really borrowing much at the moment either.
How do you see that changing going forward? Is there any sign of your customers starting to borrow more, Jacko?
We did put up a few slides indicating, increased numbers of applications for credit. Unfortunately, a lot of those applications are being declined because a number of people that are coming and applying for mortgages or car loans or whatever are in some degree of distress. So we wouldn't want to lend to them, but we are seeing an increase in the number of applications, and I think one of my colleagues described it as there are some green shoots out there. The key point for me is we all know things seem to be getting a little bit better, but I think it's going to be a slow and gradual process. Certainly that's Standard Bank's view.
And just quickly, barring anything unforeseen, how would you expect 2011 to pan out for Standard Bank, Jacko?
Well, we said that in our results announcement that we really would expect, because of the fact that we think we can keep our costs flat, because we anticipate a modest improvement in economic conditions in the markets in which we operate, and because there should be a strong decline in bad debts, you should see a return to profit growth or reasonable profit growth in the current year, but we weren't more specific than that. So certainly I think we feel that the 3 years of earnings decline hopefully is behind us.